Hey everybody, Dave Bartosiak here in sunny Isles Beach, Florida right now, reporting to you live. Now, I wanted to go ahead and be out on the balcony so that you can see the beautiful view that I have of the ocean on one side, the intercoastal on the other. However, the Wi-Fi was not letting me do that, so a little frustrated you couldn't get the awesome shot. Instead, you got my ugly mug here against the wall, but hey, it's better than not seeing me at all, right? So switching up styles here, reporting from the road here, and I figure let's go ahead and dig into this good, the bad, the ugly review on a wild week in markets after a ton of volatility with Donald Trump getting voted into office, a pretty big surprise there, and let's see what it did to our stocks that we had put on. So first and foremost, I guess we'll cover Dish Network. So I was looking at Dish. I saw that they're starting to cut the cord with their Sling TV, and they were also putting some pretty good packages together on their basic Dish Network satellite TV package. So what I did is I put on a bull call spread on Dish Network. I was long the December 16th 55.60 call spread for a 205 net debit. That's what I thought would be a preferred trade in this video, in the video we did last week. So essentially, this one gives you the max profit when shares of Dish Network are trading above $60. So the good news is that Dish has rallied pretty significantly, putting this into the green. So that's a definite plus. But remember, we're long the 55 call, we're short the 60 call. So when you start to get this rally, and we still have 2.5 or a month and a half until expiration, the call that we sold, that $60 call, didn't evaporate its value, right? The value is still there and we're still short. So that's why the spread's going to move a little bit slower, but things are still going very well. So if you look today, this spread is trading at $2.15, so we're already in the green. The underlying is rallied too, so we're in the green on that. So things are starting to look pretty good here, and I'm hoping that the reason why I went out to December 16th was to catch a little bit of this post-earnings drift. I hope that that happens. So my exit strategy on this one here, if you're loaded up on the Dish Network call, is have a little bit of patience and just let this post-earnings drift take place. So just keep on hoping for this rally to keep on trucking on, so to speak. Now, we also looked at Mylan. Now, this was a drug manufacturer. They made that EpiPen, and they were in the news for some bad behavior, pretty much. They got called in front of the House and the Senate committee because these guys jacked up the price of that EpiPen from $100 for a 2-pack to $600 for a 2-pack. Since then, they've seen some other generics that are going to enter the marketplace in the first quarter of 2017. So here comes the competition, and the stock has taken a little bit of a tumble. So what I did is I was talking about a long put spread, that might be the way to play earnings on this. So the example I gave was long the November 18th 37.50.35 put spread for $1.40 net debit. So that gives us a max profit on Mylan with shares below $35. We wanted it to go down. But since Hillary Rodham Clinton totally choked this week and lost the election, and Donald Trump is in, all that Hillary Clinton trade stuff is just out of the window. And part of the Clinton trade was to get out there and beat up the pharmaceuticals because everybody thought she was going to come in and just start burning stuff down. So that is gone. There's a little bit of a relief here. So this spread is trading at 52 cents as the stock has rallied. Now, basically what I think you got to do here, though, is just wait and see, because there's a ton of volatility these last couple of days. I don't know if that's going to continue happening throughout the course of the next week or so. So my strategy here is really just to kind of wait and see if this Trump relief rally does continue for the drug stocks. But so far, this is going against us a little bit. So something to keep an eye on certainly next week. And I will be covering it next week as part of my big video that I do once a month on this good, the bad, and the ugly, where I cover everything that's going to be expiring on November 18th. So there's a lot we're going to have to talk about, and I'll definitely be talking about this one too. So keep an eye on that so that you're locked and loaded for expiration Friday coming up, not tomorrow, but next week. Then we got the chance to talk about one of my favorite stocks to talk about, and that's NVIDIA, the graphics processing unit maker that's also been getting into autonomous cars and virtual reality. So rather than be bullish or bearish on NVIDIA, I put on an iron condor, which is a neutral strategy that effectively puts brackets on the stock and hopes that it bounces between a couple of levels. So the way that you do this is you go short a put spread and a call spread, both out of the money. With regards to NVIDIA, the one that we looked at was the November 18th 77.80 call spread, sold for a 61-cent net credit. And then on the flip side, going short the November 18th 65.62 put spread for a 49-cent net credit. So our max profit happens as long as shares of NVIDIA stay between $65 and $77. So as long as it's between those two navigational buoys, we're going to be just fine on this trade. Now, NVIDIA is going to report after the bell today, so it's coming up pretty soon here. So essentially, we just got to take a wait and see kind of attitude. Now, shares had sold off a little bit, so the top end of this with the call spread is right now narrowing, while the bottom end is starting to widen. So remember, we did that analysis earlier in the week, hoping that this was going to stay between these two levels, and I'm confident in sticking with our original decision here. So my strategy here is going to be sit around and wait until after the bell to see what happens with shares of NVIDIA. So it's too soon to make a decision on these guys just yet because they have yet to report. Now, the last one I want to talk about is Disney. Now, we talked about Disney in the Zacks Live Trader Premium video, and this was a little bit further out sort of trade because I was bullish in the long term. So this was a Disney bull call spread, and we looked at the January 92.50 100 call spread for a $3.25 net debit. So there's a big wide window there from 92.50 to 100, and that's why we had to pay so much for it, $3.25. But the upside on this trade is potentially the difference in the strike prices, which is $7.50 minus that $3.25. So that's 4.25. So a ton of upside potential. But how are we going to get this max profit? Well, max profit comes in with Disney shares above $100 per share. So we've got a few months for this to take place, and I was hoping that this would in fact happen with the release of some of the new movies and how much money they've been getting. They're over $6 billion already on Disney Studios this year, a phenomenal year for them. So right now the spread is trading at $3.50. It's in the green a little bit, which is good, but still we're going to have to wait earnings here on Disney also, just like that NVIDIA trade. So again, the exit on this, they're going to report after the bell, so you got to have some patience. And even when they do, this is a call option that I went all the way out to January for. So this is definitely one of those ones that I think you just sort of take your time and allow this to go ahead and materialize for us. So very bullish on Disney, made a pretty strong call here, but it's something that I think we could definitely benefit from in the short term. So again, guys, do not forget to send me those emails. Let me know about what sort of earnings you are looking for next week, because when I get back to Chicago, I'm going to jump in that studio and make sure that we get you at least a couple of these videos next week. Now, I will still be on the road. I'll be out of the office actually on Monday. I will be on the road here still on Tuesday, taking care of things, and then of course Wednesday then I will be back in the office in Chicago. But send me those emails live at trader@zacks.com. Let me know which of these earnings reports you'd like me to cover, and if there's any of these trades that I've already told people to maybe take off, or you want me to revisit something, shoot that out there too, because in that monthly review video I want to make sure I am dotting all the I's and crossing all the T's. So again, guys, from Sunny Isles Beach, Florida, Dave Bartosiak here. Thank you so much for hanging out with me, and I will see you next week. Have a good one.
So I'm thinking I'ma scoop me something hot in this South Summer rain gay melting pot. Hottest club in the city and it's right on the beach. Temperature, get to ya, it's about to reach.